Namaste, welcome to Arthaniti, where we discuss money and money matters to help you in your investing decisions. Today, we are going to dive deep into Tata Motors stock. Yes, the stock that has been making waves in the Indian automotive sector. But recently, the stock price has taken a significant hit. Is this a red flag or a golden opportunity? As Ramdev Agarwal of Motilal Oswal only last week pointed out their investing philosophy by discussing about bruised blue chips. Is Tata Motors that bruised blue chip stock? Are the fundamentals of the company strong enough that it can rebound? And this being a golden opportunity for investors to make windfall gains in the future? Well, let us dive deep into an analysis about Tata Motors in this video. Let's start with addressing the elephant in the room. The Tata Motors share price has plunged 35.6% in the last 5 months. It was at an all-time high of 1179 on 30th July 2024. So one third of its market value has been wiped off in the last 5 months. But before we jump to any conclusions, let us put these numbers into perspective. Despite this recent tumble, the Tata Motors stock is up 6.6% for 2024. But here's a twist. The Nifty 50 index has outperformed it, gaining 13.7% in the same period. But if you look at last 3 years, the Tata Motors stock has gained 544%. Talk about a roller coaster ride. And with Tata Motors shares, you are on one such ride. Let's look at a technical analysis report published about Tata Motors in Business Standard. Now, as per that report, it says that the medium term outlook for this share looks bearish. The stock might struggle as long as it stays below 940, and today the stock closed at 785 per share, right? But some key levels that were mentioned in that article, 759 level, the 100-week moving average, 734 monthly super trend line support, and 700 interim support. Now the article goes on to say that if the stock price holds above 734 to 759, we might see a recovery in the stock. But if it breaks below that, the prices of the stock could drop further as low as 580 rupees. Another twist in the Tata Motors story, it recently announced up to 2% hike across its offerings in the commercial vehicle space. Now, the new prices are going to be effective Jan 2025. Will this be good news or bad news for the company? Well, let us break it down. On the plus side, this could mean higher revenue per vehicle sold. It also means that Tata Motor is confident about its market position, and it will help Tata Motors offset the rising cost of these vehicles. On the flip side, it could hurt demand in a price sensitive market. Competitors may swoop in with better prices, and it could hit short term sales. No analysis of Tata Motors can be complete without touching base to the EV revolution, which has helped Tata Motors share price surge more than 500% in the last 3 years. But where the market share stood at 74% in October 2023, it has come down to 58% in October 2024. In November, that share declined further to reach 49%. But cumulatively, if we see the sales for the period Jan to November 2024, they have reached 57,000 units, which is up 4% for the similar period compared to last year. Now, this decline is majorly attributed to increasing competition, particularly MG Hector and the MG Windsor, which this company is offering, has helped MG Hector's market share to rise from 13% in November 2023 to 36% in November 2024. But despite these challenges, Tata still holds a dominant position in the Indian EV market. It still accounts for roughly 65% of the e-car market share, and it is gearing up to face these challenges with new models like Curve EV, and an extended version of Nexon EV is going to hit the market to face this competition. And it has continued to expand its sales networks, and it's still offering incentives like the 6-month free charging at Tata Power charging points. Correct. So all these, they are uh, putting all efforts to face the challenges because of increased competition in this space. To understand the health of a company, it is very important to look into its financial position. Let us look at the financial position of Tata Motors for the July to September 2024 quarter. Now, the revenue for the company stood at 1,01,000 crores, which was down 3.5% year on year basis. EBITDA margin was 11.4%, 230 points down year on year basis. EBIT margin was 5.6%, which was down 190 points year on year basis. As far as free cash flows for that quarter are concerned, they were negative at 2,900 crore rupees. Now, these negative cash flows were primarily driven by low volumes due to supply constraints. The net automotive debt stood at 22,000 crores at the end of second quarter of financial year 2025. It is worth to note here that despite negative cash flows, the company management is optimistic about the financial future of the company. It aims to become a net debt free company by the end of financial year 2025. It expects an improvement in its all round performance, especially in the commercial vehicle segment, in the second half of financial year 2025. It is noteworthy to mention here that the finance cost has reduced by 618 crores to 2000 crore rupees due to reduction in the gross debt for the quarters July to September. So all is not the picture is not all gloomy, and the management expects a turnaround in the performance of the company by the end of financial year 2025. So that is by March 2025, the company should see a turnaround as per management expectations. We also cannot ignore the global factors. Tata Motors has presence in the United Kingdom, yes, home to Jaguar and Land Rover. South Korea visits Tata Daewoo Commercial Vehicle Company. It has a manufacturing plant in Thailand, Spain, assembly operations in South Africa and Indonesia. Well, it is present in many countries in Europe for its commercial and passenger vehicles, Middle East, especially in Dubai, South America, Russia, and CIS countries, and Southeast Asia, Africa, and many SAARC nations. So, global factors cannot be ignored when we are analyzing Tata Motors. Now, a potential rebound in the global car demand is going to be of advantage to Tata Motors, and emerging markets could be gold mine for the company. But Tata Motors can face challenges on the global front. The supply chain problems are not going anywhere in the near future, and raw material costs are on a roller coaster ride. Add to it currency fluctuations, which can prove a headache to its international operations. To summarize, many analysts like Motilal Oswal Financial Services, Nomura, Jefferies all have advised buy on this stock. Given the strong fundamentals of the company, its market leadership position in the EV segment, add to that advice. The confidence of the management in the turnaround story of the company, which they expect to happen in the second half of this financial year, also their aim to make the company debt free by financial year 2025, are all good news for the company. But as investors, we cannot ignore the risk. The global supply chain disruptions, market volatility can pose challenges. Increasing competition in the EV market may put pressure on the market share of Tata Motors. Also, global economic factors and currency fluctuations can impact their global operations. So, these risks as investors cannot be ignored. What will you do? Do you think this is a bruised blue chip which fits into the definition given by Ramdev Agarwal and can be a golden opportunity to buy this stock at current price, or is it a wait and watch situation? What do you do? I would like to hear from you, and please comment below the video about your thoughts on Tata Motors. If you have liked my video, please like, share, and subscribe to my channel for more such informative and educative videos. The aim is to help you and me take right investment decisions. Also, do not forget to hit the notification button so that next time I share a video, which will be every Monday, Wednesday, and Friday, you are the first one to see it. Until next time, stay safe. Goodbye.